Wow, did the stock market just get pump and dump? The entire stock market has looked like they just pumped and dumped everyone. I mean, this run up from this last month of August, looked like it was maybe legitimate, but it may also just be a pump and dump as it went almost hyperbolic. And then now you're in the dump phase. And here's an example of a pump and dump. Yeah, I mean, of course this is extreme. This is a pump and dump stock where they run it up, capitulation top, classic capitulation top. Huge candle with a wick. And what happened on the dump? There's gonna be huge swing either way because all the players, you see the volumes, all the players are still trying to figure out what to do, and it's just whipping back and forth. Goes all the way up, goes all the way down, go all the way up, go all the way down, and then at some point it stabilizes. It's like in engineering or in mechanical system, you implement a step function or impulse function, and it takes the very first oscillation is big, and then it'll wiggle around, and eventually the oscillation stabilize, and that's a classic signal of any impulse function. And likewise with a pump and dump stock. Now, obviously, the stock market is not gonna behave anything similar to that, but the analogy is still the point is that if this is a pump and dump, here is the first reaction, the impulse step function, and here's the first reaction. So you're gonna expect, here's the volume. So on Monday, obviously, they're gonna be huge volume, right? So what do you see on Monday will be you're gonna see another candle. I don't know. Let's just choose a red pen. Um, anything like this, anything like that, maybe lower. Who knows? Right? It's gonna be huge, and you gotta have another another uh red bar if it does go down, and then it's gonna be something. The range is gonna be huge this week. Right? The volume is gonna be big this week. It's gonna take a while before the oscillation starts to stabilize. So at this point, all you really can do is play the extreme. Play the extreme because at any point it can go one way or the other. You don't know. The range is going to be huge. The volatility is going to be huge. The fluctuation is going to be huge. And there's going to be misdirection everywhere. So if you look at this daily chart, this is a red McCullen oscillator candle. This is a red McCullen oscillator candle. On the negative side, this is a a bearish indicator on the McCullen oscillator. Same with the RSI, a bearish indicator. And then all you can do is benchmark previous bear case scenario. Here's the benchmark. This stabilized at the 20-day moving average. And this most likely will stabilize at the 50-day moving average, but it most likely will penetrate. I don't think it will get to the 100-day moving average. That seems way too far, but you never know. Right now, I'm not planning on it, but let's see what happens. It's most likely will penetrate the 50-day moving average next week. Like this guy penetrated the 20-day moving average. And it looks very bearish. Look at this candle. It's a down red candle, right? So you're going to have another down red candle. And this will be a down candle. So this is all you really can do is based on statistics, based on benchmark. Um, look at these previous scenarios. So on this one looks similar. So let's look at this scenario on 713, and then we can look at 721. So 713, let's go to Amazon, and let's see what it looks like on Amazon. Here is Amazon. So 713, right here. Look at that big capitulation top candle. Huge capitulation top candle. Look at this run up. Huge run up. Similarly, huge run up. So you gotta benchmark this, right? I mean, in hindsight, you know what? If you just step back, look at the big picture, zoom out, and not look at if you get so close into it, you're gonna miss the picture, and you can easily make mistakes because you in here battling in the trenches, trying to make decision when these things are moving a million miles a second, trying to figure out, is this gonna go up? Is this gonna go down? Is this gonna go up? Is this gonna go down? Well, is this a bearish candle? Is this a bullish candle? You're gonna miss the big picture. And it's so important to look at the big picture. And with the big picture, you have an idea on the general direction. And going in the general direction is called trending. Today should have been should have played down. Anyone who play up because they think of a rally is counter trending. And you just gotta go with the big picture. And yes, it's difficult to play today, but if you were to play, you should be playing the downside. There is no reason to try to play this bounce, even though yes, there could be a huge bounce, and you can make a lot of money on this bounce. But guess what? If it doesn't bounce, you can lose a shitload of money. And if you seeing your portfolio is blown up, if you seeing your account is down, whatever amount that fear you, 5, 10, 15, 20,000, whatever amount, you get scared, you're gonna cover. You're not gonna wait for all this ride back up because you don't know at the time. You do not know if it's gonna go right back up or not. Um, so let's look at 713, and let's just see if this is very similar. I'm gonna use a different color pen. Let me choose a yellow pen so it's easier to see. Actually, fuchsia. I like fuchsia. Easy to see. Look at this huge run up toward the capitulation top. Look at this huge run up. Not a capitulation top, but you know, you you take what they give you. This this is just a bullish candle. However, keep in mind, Amazon is not the one that is driving this run up. It is Tesla, it is Apple. Okay, these Tesla and Apple are forcing other players of similar names sympathetically. They are kind of tied at the hip to perform in similar fashion. So when Tesla is getting pump and dump, or in the pump stage, every stock is getting pumped. Amazon is getting pumped. Nvidia is getting pumped. Every big stock, Google, Baba, Shopify, the name goes on, Netflix, Facebook, whatever. All of them is getting the sympathetic, tied at the hip kind of movement up. So you have this big run up, and now you're at the top, and you got a correction. Well, you don't really know. Now you got two candles. You don't know what to do Monday, but you can statistically benchmark previous results of similar fashion. So you call this a capitulation top. So let's let's just combine this candle, this guy, combine with this guy so that you have a capitulation top candle. Okay, it's not really, I mean, you can't really do that, but yeah, I'm gonna do it because I need a capitulation top candle. So here's a capitulation top with this candle moving toward this candle. So we combine them. That's a capitulation top. This is a capitulation top. Then you got this candle, which is huge swing. So this candle, which huge swing, and it penetrates. And then this candle, right? But I'm gonna combine these two because you know, this is next level stuff. So you're gonna combine these two. So I'm gonna say it's gonna be something like that. So most likely it's gonna be something like that. And I'm gonna think it's gonna be some, that probably is the most likely scenario. And then you got some wiggle down here before it bounce up. So this week is gonna be very unpredictable. I mean, let's just assume this next week is gonna be very unpredictable. And let's just look. This is 713. So I got here 713. Okay. And I line up 713. Let me move this guy out of the way. So 713 is right here versus what we have today. So here's your capitulation top. You got this huge sell off. You combine this to that capitulation top, huge sell off. Then you got an additional sell off, Okay, so it's gonna be. I mean, I don't know. This does look like if you combine these two, it's gonna go down. Yeah, not the best benchmark. I mean, you can't really. I guess you can't really benchmark it. It's hard, but what I can see out of this is that this next 2 days, you got head fakes rally. I mean, you got head fakes here, and then a sell off, right? And then you got another sell off before. So I'm thinking Monday, best case scenario, um, probably another head fake sell off, but or head fake rally, but it may be more pronounced. Who knows? I mean, if anything, anything that is positive on Monday, I'm not gonna trust. So playing the downside on Monday is probably the correct trend. That is the way to go if you are to play on Monday. I think it's gonna be tricky to play on Monday because it's just at this point I think it's difficult, but I anything can happen. It's almost un it's not even good to project. I mean, projecting at this point, I know whatever the projection will be is going to be incorrect. Whatever the projection is going to be incorrect because you can't really project these type of scenario. All you can say is probability. Gap up, maybe a rally up, and then further correction. Or you can, it can be a big gap down and just goes straight down. Or it can be, any scenario is possible at this point. Gap down, go up, and then get down. I mean, but the point being is, I think it will be a down day on Monday. It just makes the most sense based on statistics. Whatever happened in between, the point is you got to realize that it's gonna be a down day tomorrow. Now, there is an exception, like always, there is an exception. If you do have a flush, right, then it's gonna behave slightly different. At any point, if you have a flush situation where it flush, there is a good chance of a recovery, just because that is the behavior of the flush. The flush kind of wipes everybody out, and then there are enough buyers and afternoon trash gonna manipulate up. I mean, I've seen it almost every time. If you get a flush, there is a very good chance of a rally. Not 100%, But statistically, yes, you get a flush, you're gonna get a rally. But if there's not a flush, and it's just a gradual kind of thing, most likely it's gonna be a downside. So playing the downside is the best chance you have. Um, Now you gotta be patient because you there's always a chance that you get caught doing a run up. And if you play it incorrectly, if there's some kind of initial head fakes here and you get in, well, this is a lot of pain. And maybe this is 2 hours. Maybe this is whatever, 1, 2 hours. It's gonna feel a lot of pain. That 2 hours. You don't want to wait 2 hours feeling the pain. So you gotta wait for confirmation of the pullback or the the smackdown or the rundown. You don't want to pull the trigger too quickly. Or if you're willing to suffer the pain and wait it out, then go ahead. Be my guest. Suffer the pain and wait it out, knowing and have confidence that it's gonna go down eventually. I don't like playing like that. I'd rather just wait for the confirmation of the downturn, even though the profit might be less, right? Because if it goes straight down and you get in at the beginning, well, you're gonna make the most money, right? Because it's just, that is the biggest gap from here to here. However, if you get caught in the profit or the rise, you're gonna have to feel that pain before it turns down. So however you play it, know that your objective has to be the downside. In fact, I would even, just to be safe, I would not be selling any puts because, um, or is it calls? Let me see. Going down, you would be selling the calls. So I would not be selling puts because the puts would be going up in lots of value. Anytime you have a flush, or smackdown, the puts goes up 3, 4, 5, 6, 7x. The IV, the intrinsic value of the puts just shoots straight up. So if you sell one put here, trying to get this little profit, trying to get this small little rally, trying to massage it and scalp these little rise up. If you get caught at any time doing a smackdown or the wrong direction, your stops might not even get you out in time because it's just so fast. And whatever discipline you have to try to get out, you're gonna feel that pain because though if you wait, it can just continue to go down and continue to go down, just like you see today, right? Anybody who sold puts today, anywhere along here, anyone who sold puts is gonna feel that pain. Yes, if they hold on, eventually it will recover, but jeez, that's a lot of pain to hold on. A lot of pain before you get that recovery. So I would not be selling puts at all. I mean, you just don't just don't. If it rallies or whatever, if it shows like, hey, this is such a good chance to scalp. I can scalp a couple hundred, 3, 4, 500. I can scalp. Yeah, you can scalp, but you get caught. That 3, 400 turns into a loss of 3, 4 thousand quickly. And if you say, well, okay, I'm down 3, 4 thousand, eventually it's gonna go. You just trick yourself. You seed your head with thoughts. You're gonna try to self-fulfill yourself. You're gonna try to mentally convince yourself it's gonna go back up. It's gonna go back up. I know it's gonna go back up. I mean, you're not seeing anything objectively at that point because you just want to force it to go back up. Force it, just staring at it tick by tick by tick, and it just seems like infinity. And you're looking at your account, and it's negative, negative, and it continues to go down. And every time it continues, and any false rally, you see your positive gain a little bit, a recovery. And you say, okay, okay, I'm gonna be able to get it back to positive. I'm gonna be able, and then it just boom, another smackdown. Boom, you go to 3,000, 4,000 in the loss column. Oh my goodness, you're gonna tear your head off. It's just a lot of pain, a lot of pain. I'm telling you, you do not want to ride those puts. until the recovery, because unless you shut off the computer and say, hey, you know what? If they get me, they get me, and you just turn it back on at the end of the day, then yeah, I mean, you probably would be okay. But there's no chance that this could have just be a legitimate crash. I mean, this little fake rally, boom, it can escalate into the crash at any time. You do not know, and then next thing you know, you open your account, you're down 50,000, just like that. You go, oh my goodness, my account is blown up. What do I do? I'm done. That's it. My account is blown up. And 50,000 might not be a lot for some people, but it's still a lot. 10,000 is still a lot. Even to me, even when I lose a few hundred, it feels like a lot, because you don't want, as a trader, you just have this ego in your head that you're gonna be right. And you got to check your ego. It's so important to check your ego and have your discipline. Have your discipline at all costs. Have your discipline. Minus 300 loss max discipline. If I lose 300, I'm out. I'm done. I'm walk away from the table. I am not going to take more than that. Don't play option expiration Friday. Beware of head fakes and the flush. These type, and there's tons of disciplines you should be writing down. Whatever disciplines whatever weakness you have, the more you play, you have to have this fear in your head, especially a time like now. You cannot play loose, because I'm telling you, you play loose, you can easily, it can easily be a crash scenario. I mean, as funny as that sound, easily at this point where there's just so much fear. I mean, yes, the VIX isn't showing it, but the VIX can change direction at any second. At any second, you can get boom. I mean, yeah, this is the coronavirus, but it's not this is kind of a legitimate, and this is not legitimate. But even though it's not legitimate, they can engineer enough fear. I mean, it can really spike this VIX. I won't be surprised if it hit 40. I mean, I feel like they're gonna try, because at this point, I just feel like there's a lot of damage. A lot. I mean, it's just caught. For me, it just feels like, wow, the way it ran up, the way I'm looking at Tesla, the way I'm looking at the Nasdaq, it just feel real for some reason. Like, this is a real run up, even though I know it was fake. It's like, man, there's so much money flooded by the feds, and there's so many institutions out there with money, and now everything is looking, coronavirus is going down, everything's looking good. It just feels, even though it's fake, it just feels real. And then this hits, and it's just so much damage. And if Monday hits again, oh my goodness, it's just like you want to tear your head off. It's just more, and I'm sure any investor right now is just feeling it, even though, yes, overall, an investor love this gang, but when they see their account goes from whatever it is, right, 300, 400, 500, from a huge gang, and they see it down 40,000, 50,000, whatever it is, they're gonna feel that pain. No one wants to lose money. No one wants to see their account goes down 30,000, 40, 50, 60,000. It's gonna feel painful. Even they ignore the fact that they made 100,000, 200,000. They ignore that. All they see is right here, right now, down 40,000, 50,000. And if it hits tomorrow, man, what do? Hit the sell button, hit the sell button, hit the sell button, and you can get a crash. I mean, it's so easy to engineer a crash at this point, because it's really irresponsible, um, for whoever to drive this market. This was really irresponsible. I mean, this should never have happened. This type of rubber band, this type of pulling, running up, it's very irresponsible, because now you're giving people all this hope, all this crazy gains in their 401k and their portfolio. Everybody buying options, seeing it up 70,000, 80,000, 100,000. Everybody's like, woohoo, man, I can't believe I made all this money. And now the pain comes in, and the next day more pain come in. Everybody wants to just get out. I mean, even how much more can you take the pain? Take it for 1 day, take it for 2 day, but Monday you take it for 3 day. I mean, can you take it for 3 day and go, man, I gotta get out. I am really not wanting to feel this anymore. I just need to get out. And when one person hit the sell button, another person hit the sell, because this stops. Everybody, any man, this stops along the way. This technical line, right? So this 50-day moving at, I mean, there's got to be stops here. There's got to be stops here. It's got, I mean, everywhere there's got to be stops, and it's just gonna boom, 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 boom. It can easily crash on Monday. Now, I'm sure the feds know this, and I'm sure there's other players who knows this, and maybe because they know it, they're gonna rescue it. If they don't rescue it, if they don't go in, whoever behind the curtains, if they don't go in and try to stabilize this market, man, you can have a really vicious crash. And when you get one crash, one huge day, oh my goodness, it's gonna be like this. Where, I mean, this seems small. Looking at this, I remember looking at this and I was like, man, this is just, the movement was crazy. But you look at these movement, it's small compared to this movement. Look at this movement. Holy moly. This is, I don't know, above, what is this? High of 303 to low of 272. 30, I mean, that's 30 points. 30 points. I mean, that's like from here to, wow, that's 30 points right here, right? This is high of uh 223. So all the way in, that's huge movements. I mean, come on, that is more movement in 2 days than this crash. And I remember watching this and I was like, holy moly, it's like so crazy. But yet the swing right now is more than the swing you saw during this February March crash. So, wow. I mean, can you actually get a, yeah, I feel like it's, I mean, another wicked candle on Monday. They're gonna attempt this candle, and this VIX is poised to move up on Monday. I just feel like they're gonna try. I mean, this right here, maybe they rescue it. I don't know, but it's a very good chance that I'm feeling the fear just thinking about it right now. That, yeah, this, if you can have a Monday crash. I mean, that's what I'm thinking. So I'm gonna do some more videos and look at Tesla and Amazon, but Apple. But for right now, this is what I'm seeing.